Hello, 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 and welcome back to this live episode of the Foreclosure Deals Coach podcast. This is the show where we discuss how to find, figure, fund, fix, and flip a foreclosure deal. I am your host, Donny Coram. A little under the weather today. We just got back from Mexico. I know last week I was showing my view from the balcony in our condo that we rented in Mexico. This week, hurting a little bit. We are in a massive snowstorm. Hey, check this out. I'd like to give you a little bit of my background right now from my house. That's the snowy look that we woke up to this morning, and schools was shut down. And just all in all, it's a mess out there. Here we are, middle of March, and we're still dealing with snowstorms. So that's Colorado for you. Kind of the nature of the beast. Undeterred, though, no matter what the weather is doing, there's always a great discussion to be had about the foreclosure market and how you can invest in the foreclosure market to make a minimum of a $25,000 profit by doing a deal from anywhere in the country with the foreclosure market. So, with that in mind, we like to keep track of what's happening with the foreclosure market in real time. And, there's always a lot of articles out there about what's happening in real estate in general. You got to keep in mind that bad news sells much better than good news, right? So if you're a newspaper, if you're providing information to the masses, it is just generally easier to discuss the bad things happening in the marketplace than it is discuss the good thing. People don't really want to talk about how the market's just great. So with that being said, you have to take some of the foreclosure news with a bit of a grain of salt. And as I mentioned, my voice is going to be a little bit crackly here throughout this, so bear with me, please, and ask some questions. That'll be a little break-in. I see a couple people have already tuned in today. Click in wherever you happen to be, comment, say hello, let me know you're here, ask any questions that you have about the foreclosure investing market. With that, though, I did find an article that spoke to where some of the larger pockets, if you will, of foreclosures are starting to rise and on Newsweek here. So I'm going to bring that article up. We're going to discuss that in a little bit more detail and go from there. So let's hop on here. Present, share. Here we are. Excellent. All right. So right now, the way the article starts is that we're in an affordability crisis. Let's talk about that a little bit. We discuss all the time that obviously the foreclosure market is driven largely by interest rates. That's the housing market at large. If you've got a whole bunch of sellers who have seen their values increase over the past couple of years, what some would argue is hyperinflation. Now, if they have to sell their house or they want to sell that property, they're finding themselves in a jam where the buyer side can't afford quite as much house they used to be able to afford because interest rates are high. Now, that settled down a little bit. We saw 7 to 8% interest rates about third to fourth quarter of last year. Things look pretty bleak as far as that went. Here in first quarter, we've seen that settle down a little bit. Now we're facing somewhere between 5 and 6% interest rates, which is pretty close to what I would describe as back to normal, right? But this article, obviously reporting a little bit behind, is saying there's still a bit of an affordability thing as people are trying to struggle to cover their bills in general as the cost of everything has gone up. Cost of living across the board is higher. We look at the cost of, fuel has gone up. Food is definitely more expensive. The CPI or consumer price index is definitely higher than it's been in quite some time, which basically means that it costs more to live and function than it has in previous years. Now, the reasons for that vary. You can obviously point at the federal government. You can go to the administration. You do all the things that people want to gripe about, but rather than complain about it, I'd like to just mention it's sort of an is what it is situation. The market is cyclical by design. What goes up, or in this case, way up, as we saw interest rates very low, must come back down, right? And so rates went really high for a bit. Housing has to struggle a little bit with that. And if you're trying to sell in this market, you're obviously going to have a little bit more difficulty selling. Now, this was already going to be true, but if the house also needed some work, it's got some deferred maintenance. You got to keep in mind the cost to remodel a property is also more than it's been. Labor is extremely expensive because the cost of living of construction in general general, these construction guys expect to make more for their time because they've got to feed their families and pay their mortgages and put fuel in their cars, et cetera, right? So the cost of everything went up on the rehab side. The cost of materials went up a little bit, right? All of this is to say that if you were trying to bring your house back into marketable condition, you're facing some struggles there, meaning that you're not only going to struggle to sell the property, but now you may struggle to get the property repaired cost effectively, so it's more desirable on the open market. Combination of all of this is there are simply more foreclosure filings taking place. The biggest state mentioned for foreclosure filings in the article is Florida. But we also have to mention California seeing quite a bit of foreclosures. Texas, New York, and Ohio all emerged as hot spots. Florida leading the charge with 2,732 foreclosure starts, closely mirrored by California's 2,700, and then Texas at 2,700 almost as well. Okay, so obviously there's a lot more foreclosures that have been taking place. I'm in the Colorado marketplace. This is where we focus majority of our energy. We are also looking at the Nevada marketplace with a partner coming on board in Nevada in the next couple of months. So we're analyzing that market pretty closely. And in every case, there's been a significant uptick in the amount of foreclosures on the market. This has got to spell opportunity for you would-be buyers, though, right? Instead of looking at it, oh no, the market's in a foreclosure status, the right attitude towards this today is that if there are more foreclosures, there should simply be more opportunities for investors, the you and me of the world, that want to buy those properties out of foreclosure. So the bank now owns the home. In a lot of our cases, we are fixing the property up, we're repairing the property, then selling it back on retail. Now, what makes us think that we're immune to the foreclosure crisis? Well, foreclosures generally have a couple of problems. There's a stress situation on the part of the bank that's usually caused by the condition of the property. We're going to eliminate those conditional problems by painting the house, flooring the property, updating the cabinets, the countertops, the tile, the appliances, et cetera, et cetera. Generally speaking, we're spending somewhere between $30,000 and $50,000 on the remodel. That investment of capital takes the property from an undesirable, nobody wants to pay the higher interest rate on it, to a more desirable property. This is obviously great news as investors. See, it's not to say that even in a foreclosure market, we're not selling homes. It's simply to say that homes that are needing work are taking longer to sell, which is driving what's calling a negative weight on the market as a whole, meaning if there's a lot of negative inventory or toxic inventory on the market, if your neighborhood has a bunch of foreclosures, you're going to look at the prices of the foreclosures and they're going to draw down what the total value of the properties in the area are going to be. Okay, so that's a bad thing if you're a homeowner. But if you're an investor and there's a lot of opportunities, that's actually a very good thing. So with my program, I help you to find those foreclosure deals in the target markets that we're working in. We analyze those deals closely to make sure that they are solid deals. We're looking at the numbers of what they could potentially sell for fixed up, the days on market, how much work is going to go into the property, et cetera, to make sure it's a solid deal. We fund the deal using hard and private money because you don't want to deal with conventional lenders with foreclosures most of the time. The reason behind that is simple. The banks want to finance a property that they're not going to have to foreclose on later on, right? So if the house needs a ton of work or the utilities aren't on, or this is, they're generally looking to finance residential buyers going into the property, and they're doing so at a relatively high rate again because interest rates have come down a little bit and people are now buying homes again, right? But the funding side is where we assist the client in making sure that we're providing a hard money deal that's feasible for the client to actually do the deal and get it closed. Usually we can get a hard money loan closed somewhere between 1 to 3 weeks, right? Is kind of the average that we're looking for, as opposed to a conventional finance taking 30 to 45 days to get closed. So we can work very quickly to get the deal funded. Then we're working with contractors to get the deal fixed. So the work is getting done quickly, cost effectively. We're not working with general contractors generally because they tend to increase the price of everything with their cost plus financing. What cost plus means is when you buy the property or you buy anything for the property, be it the labor involved or the parts, the GC tacks on a margin onto it to make a profit on the deal. Not knocking it. It's a perfectly suitable model. It's worked for a very long time. But for the investor model, it simply doesn't work. We have to get lower pricing on everything for this to function and us to make a profit. So we use a remodeling project manager. We locate a project manager in any market in the country, people who specialize in construction, ideally have a group of people they work with all the time already. And we provide them with a scope of work, as in, this is what we want to get done on the deal. The problem with GCs is they want to fix everything, right? That's the nature of being a GC. If you're making money for doing repairs, you are obviously going to want to do more repairs than less repairs. Whereas when we select the scope of work, which we figure out by doing a Matterport tour of the property, we walk through the home digitally, determine what needs to be fixed to get it marketable versus what can stay as is. We create that scope of work. We then export a labor list. This is the labor it should cost. We figure out how many hours, man hours of labor it should take to get the deal done. We then export a materials list to determine what parts need to be bought. Once all those things are decided, we hand that to the project manager. They hire the necessary subcontractors to get the work done, and then we fix the property, get it back to marketable condition. Finally, it's the flip phase. That's everybody's favorite part because you're putting the house back on the market. You're ideally going to make a profit on the property. And we eliminate a lot of the very expensive hard costs, the biggest one being the agent transaction fees. We have team agents on the team that are working for a much lower percentage than a typical retail agent. And it makes sense why. We're doing a lot of volume with the group as opposed to having to find new clients all the time. This system's throwing off a listing a week or so because we're looking to do 50 deals with our 50 clients at minimum in a year. So because of that, my agent offers an incredible discount, still does a wonderful job of marketing and selling the home, but offers a great discount on the transaction side. We negotiate a better deal on the title company side. We negotiate a better deal on the insurance. Everything about it is much cheaper than it would be doing this on your own, netting you more profit on the deal. The net result of this, and in the investment world, this is largely called a direct participation program. And there are direct participation programs of all shapes and sizes. When I was very early in my career, I was working with a DPP in the oil and gas industry, where basically you were buying in to wildcatting, basically drilling holes in the ground and hoping oil popped up. Problem with that, very high risk, high reward investment. A lot of people didn't make a lot of money doing that deal, so it's not something I wanted to sell for very long. But DPPs of this sort have been around for a very long time. This particular DPP, direct participation program, allows you to directly participate in the remodel of a property. And the objective is that you're profitable to the minimum of $25,000, preferably more. You're excited about the process and you want to do it again. My objective as a foreclosure deals coach is to bring in 50 clients all across the country, each of those clients doing 4 deals per year, making $25,000 per project on average after all costs. So that's after factoring in your down payment, your rehab costs. We want you to profit around $25,000. No, you don't hit that exactly every single time. Sometimes you're making a little bit less or a little bit more. It kind of depends on the project. Okay. But if you build momentum and you're doing this consistently and you can do 3 to 4 of these a year pretty consistently, it turns into a very solid income that you can then use to invest in other things. That's the objective. Flipping is a wonderful way to produce an income. I did 47 flips in my best year, 45 in another year, 40 in a year before that, and realized that it's very difficult to make a living in that in the long term. You have to it's a lot of moving parts, it's a great deal of stress. Even though there's a lot of foreclosures coming on the market, the objective is going to be to take the money you make from foreclosure investing, buying deals as it were, and reinvest that into, other vehicles, investment vehicles, dividend paying stocks, businesses, rental properties, commercial, et cetera, et cetera. Most people have a day job where their income is sufficient enough to cover their bills and lifestyle. So this is a side hustle, if you will, that allows you to participate in a flip where you keep the profit. And in doing so, you've got more income now to invest in other things and build your net worth and your passive income, et cetera. The point of that is flipping is not a passive investment in and of itself. It's an opportunity to do a lot of deals, especially in the market that we're heading into, where there are a ton of foreclosures about to be on the market. But long term, the objective is to take that money and invest it somewhere else that allows you to produce a passive income, so you don't have to continue to flip forever. The good news is there's going to be a lot of flips available. With all the foreclosures coming in that article we just saw, it's going to be very easy to locate deals. That being said, most people suffer from what I call analysis paralysis. It's a very simple thing. If you got to buy a property, even if it's right here in your backyard and you've never done this before, there's a tendency to worry about things that may not be that important. Right. And so when you're worrying about those things, you're not taking action. You're not actually buying into the deal. So this program, when you buy into the coaching aspect of it, is really to kind of take your hand and walk you through the process. So the stuff that makes you super nervous, that'll prevent you from doing this on your own, I'm going to help you with that. Right. And I'm going to help you with that because that's what you're paying for as part of the coaching fee. But in full transparency, I don't just make money on the coaching side. You see, every deal that we locate, because there's a cost to locate deals, both in time and money, every deal that we locate, there's a margin that's created for my company that allows me to make my living in addition to coaching on finding deals for my clients. I think it's the perfect synergistic relationship between the investor and the company because it incentivizes my team to find deals for the clients all the time, as opposed to a lot of education programs that are out there whose simple goal is to give you the idea or the process of doing this as opposed to the ability to actually do it. Right. And I'm not, again, it's not me talking badly about my competitors, but rather I've never been a big fan of just educating people expensively and then saying, hey, good luck. I hope it works out. With my program, you are actually going to do deals. And as such, the investment that you're making is a lot more valuable, in my opinion, because we're walking through the process and not just getting educated. I've got a 40 video course that is going to walk you through all the basics. You've got access to me and my team through the Slack channel to ask questions and get educated. But the best education you're going to get in real estate investing and in any sort of investing is the actual activity of doing it. Right? We can talk till we're blue in the face about day trading stock. Right? You can have that discussion with somebody who's been day trading for years. You can watch YouTube videos on day trading stock, but until you are actually day trading stock, okay, it's not going to be as lucrative or profitable as actually doing it. This is the same thing with real estate investing. Instead of talking about it or the theory, we work you through the practice. And that's why I'm really proud of what I've created with over 30 clients now who are doing deals actively in the marketplace. The goal to get to 50 clients who are doing deals. And I can tell you that, the future of this program is super bright because I believe that more and more people, as you see, as the buzzword of foreclosure keeps hitting the market, you hear more and more people talking about houses foreclosing. There's going to be a lot more interest in it. And that's just going to add to the growth of the program, which is good for the clients because the more deals that we do, the more deals we get to find, the more deals we find, the more deals we do, the more deals we fund, et cetera, et cetera, et cetera. It really does help itself the more that it grows. Right. So been chatting for a while. We got a couple minutes left in our 20 minutes that we try to spend here. Would love to hear from you. We got a couple of viewers left. Please hop into comments, comment live. Let me know what your thoughts are about the program, about the slight increase that we've seen in the foreclosure market. And if you have any questions about the program in general, it'd be a great time to ask that. Generally speaking, the process goes like this. You hop on a free coaching assessment call. We spend about 30 to 45 minutes going over details about how the program works, and if it's the right fit for your resources. I will tell you this, you need three things to be a coaching client. Number one, you must be willing to buy a house in one of the target markets we're working in right now. That pretty much encompasses Colorado and Nevada at the moment. So as long as you're comfortable buying in one of those two states, and most people don't care where they're buying their foreclosure flip. Why are we so limited? Well, because we are orchestrating all the pieces, the most important being the construction. We want to make sure we're working in a market where we've got boots on ground already with people who can help facilitate the deal actually getting done. Right? We don't want to just randomly do a deal in Pennsylvania and have to find the construction crews. It's doable. You can find construction anywhere, but it's a lot easier to work in markets where we've already established a presence. So that's why we're currently operating in those two markets. We're going to officially launch Nevada in the next couple of months. We're still pretty early about that, but Colorado for sure is where the majority of the deals are going at the moment. So that's critical. Next one is you must be liquid. You need to have about $50,000 in available cash. That is because the lenders currently want about 15% down. Our average buy price in the Colorado market is roughly $300,000. So that leads 15% or about $45,000 that you need to put down in order to be prepared to do a deal. If you don't have liquidity, that's okay. We can discuss where to get that liquidity. We've got a couple of lenders who lend for people who want to do a deal, so we can work through that. But we want to get that figured out before you invest in the coaching program. I do not want to bring anybody in who cannot do a deal pretty immediately. The system is designed to help people do deals. So we can discuss that. We're going to get the liquidity, but some options include cash. Obviously, your IRA, a self-directed IRA could certainly work. If you've got liquidity in the house, you've got equity in your home, we'll work with you to get a home equity line of credit on the property. That's where a lot of my clients get their money to do the deals. So that is certainly an option. A couple other places you can, private investors, you can partner with somebody, et cetera, but you do not have $50,000 liquid to join the coaching program. And then finally is coachability. And this is the one I struggle with the most. Coachability for me means that there's going to be a lot of stuff just by design that's going to seem awkward or abnormal. If this were super easy, literally everybody would be doing it, and there would be no need for the coaching program, right? So the idea is that if you're going to sign up for coaching, that you believe this is something you want to do, and you're going to take the advice that's provided by both myself and my team, because we are trained in the area of foreclosure flipping, having done hundreds of them now. Want to make sure that you're coachable, that you're able to take direction as needed. And I'll be frank and say, not everybody is. A lot of people come in with some preconceived notions that are not a really good fit for the program. We're definitely looking for that in the early stages now, the courtship process. If it doesn't seem like you're going to be super coachable, then we just pass on the deal. I don't want to bring anybody to the program who can't find success doing what we're doing. If we have to be honest. Foreclosure flipping is not for everybody. It's for a very special breed of people who want to make money I don't think it's a high risk investment, but it is a lot of moving parts. If you buy it correctly, it's not risky by any means. You're buying low, you're fixing it up, you're selling it. Does stuff go wrong? Sure, it does, but it usually does not eliminate profitability. I don't want to say it doesn't reduce profitability when we find surprises. Obviously, the deal is a little less profitable in that situation, but it very rarely, if ever, eliminates the profitability of the deal. What it does do is add some stress to the environment. Again, you're buying a house, in your case, usually sight unseen. We are doing an inspection of the properties, so we have a general idea on what's wrong with the house, so we know what to fix and what doesn't need to be fixed, et cetera. But this isn't for everybody in the capacity of, if you're not heavily coachable, if you won't take the advice of the team, that this isn't going to work out. And we've had some difficulties with that. So really looking for those three things: location, where you want to invest. You don't have to be in the location. A lot of my clients are based all over the country, so your location is not dependent. Liquid, having the $50,000 to do the deal, and then coachability. If you've got those three things, I would love to chat with you about joining the coaching program, becoming part of the Foreclosure Deals Coach tribe, and starting to make money in what's going to be a very lucrative foreclosure investing market. I'm certain I can help you to do deals and actually be profitable in this market, as long as you take the first step and get signed up for coaching and get going. All right, that is our show for today. No comments, so we'll part with that. I have a couple people viewing, so if you have something to add to the discussion, I'd love to hear from you now. Thank you so much for tuning in. I do appreciate it. Guys, it's going to be a great market. I'm telling you, now is the time. This is the place. And I want to be your coach if you're really willing to jump on board here and get started, start making money in foreclosure investing. I think this is a really good time to hop in. We're showing a big increase in foreclosures all over the country. And there's going to be some opportunities popping up in the marketplace. Not every foreclosure is a deal, and not all deals are foreclosures. The point is, we'll help you to find a deal, analyze the deal, fund the deal, fix the deal, and flip the deal for a minimum profit of $25,000 to you. With that, this is Donny Coram, your foreclosure deals coach. Thanking you so much for tuning in each and every single week to this live broadcast of the Foreclosure Deals Coach program, and reminding you now and always, don't buy a house, buy a deal.